Okay, I'm here. Thank you. So that's why I can easily say that the most important structure is a range market. In video that I've made it earlier in chat, uh, trading opportunities, I said once a trader learned to trade within the range market or with the range market or using the range market, nothing could stop him. It's true because we have to understand the market dynamic. We have in the most part of its evolution repeat, even if the price is in trend, we have to deal with range markets. So seeing that for that reason, for the fact that I don't know, the price for 70-80% of his time is spending doing a range market, that means that as traders we have to deal for 70 or 80% for our time and analyze. We have to deal with a range. So obviously the range market becomes automatically the most important range, the most important market structure. Speaking of markets dynamic, there are two dynamics: market dynamic 1 and market dynamic 2. It's very simple. In market dynamic 1, the price make a series of range markets when the previous range market act as support resistance for the next one. Here it is. Okay, range act as resistance, it close below, starts a range, it close below, starts another one, where the previous range act as resistance for the next one. This is one of the best indicators for a market momentum. There are traders that use I don't know, stochastic indicator, RSI. I don't know. I would like to, from a personal opinion, I don't like indicators. I like to observe the price, to observe the market structures, to understand that we had a range, the price closed below or above, and now start to do another range. This is called box effect 2. I mean box effects when a box, okay, act as support resistance for the next one, and when the price show us a series of boxes. The second one, market dynamic 2, is when a trend becomes weaker, and this means two things. Show us I mean, it has two meanings. we can understand two things. The first one, that the momentum is slowing down, and it's closing to a support resistance level. It's very close to a resistance levels. The second one is after a very strong momentum, very strong impulse, when the price has to gather more liquidity in order to go on his trend. So we have to be careful, because we will see some deep retracement, and when we have to adapt our management, especially to let the price more space to make its evolution. This kind of range is that range when here it is a small example, when it forms a range and its support goes to the middle level of the previous range. Here it is. Okay, you can see that the support of the second range is right at middle level of the first one. Another sign, another characteristic of this market dynamics 2 is the fact that it goes together liquidity to the middle level of the first of the previous range market, especially with the liquidity level, I mean the tail. Okay, here it is to identify precisely. Okay, here it is, the tail. Okay, we see that it becomes the middle level of the previous range. Another situation is here. Okay, if we identify the liquidity level, we notice that and it's not a coincidence, the fact that it's gone to gather liquidity right at the middle level of the previous range. Okay?
Yeah, no, that's great, thank you.
Well,
yeah, I didn't realize about the middle line in the range markets, whereas if you have two, one after the other.
by the way, you have on the board, on the panel, the whiteboard, it's calling, that allows you to interfere on my charts. Please do it every time you feel to.
Okay, thanks. So, can you talk about dynamic range markets?
Yes. It's very simple. In my trading style, I have two kinds of support resistance level: the static and dynamic. Static are these. Okay, simple. I call them static because they are static. They are not moving. Okay. A dynamic. Here it is. Okay, very simple. A trend one, a trend line. A trend line is not just a simple. It could it could appear as a simple trend line, but it's not. I use it as an indicator. I don't need a momentum to understand that a momentum is strong or weak, because all I have to do is watching the angle of trend line. More vertical it is, more strong the trend is, and I will make you a very good example over here. Okay, we have in front of us a triangle. This is a dynamic range market. The definition of range market is very simple: when the price stays between a resistance and a support, no matter if they are static or dynamic. In this case, we have a dynamic resistance and a dynamic support, so it's a dynamic range market. Okay. Right now we are in a phase of this range when we will have more dojis. It's a characteristic of the price. More the price will reach the apex of the range, more we will see the candles that occupies the entire space of the range, and more often in the next days we will see dojis. Okay, no bullish, no bearish, or a phase when the bullish will alternate to the bearish. I mean, we will have bearish, bullish, bearish, bullish, bearish, bullish. This will go on until the buyers or the sellers will decide to break out upper or lower the range. Okay, if and when the price will break out our dynamic range market, no matter if it's bullish or bearish, it's an important rule in order to identify the targets and the money management levels. When I say money management levels, I don't mean only those levels where once we are in trade we have to manage a trade. I mean, if we cannot enter in trade when the price will break our range, we will have the opportunity to wait for the price at the money management levels. This is a concept, this is a valid concept for both types of range market, static and dynamic. What do I mean? Let's say that the buyers will break upper. Okay, the levels where the price find resistance within the range market will become targets and money management levels. Here it is, resistance level. Resistance level, okay? Resistance levels. This is the level where the price find resistance within the range, and the final target is over here. I said the final target, but we have to be careful, because we don't know never where the price will stop. Is a bullish evolution, okay? So we don't know, but these levels are just to understand where the patterns targets are. This is not a final target of the price, is just the final target of the pattern, okay? Not the final target of the price, because I don't know, the price could go higher and higher. We don't know, okay? It's impossible to know where the price will stop, okay? But we understand that when the price will reach these levels, we have to make money management. We have to take a decision for our trades. Repeat, these levels become very important. Why? Because if we have not the opportunity to enter when the price breaks up, okay? Even because we have in front of us suddenly a level, so we have no space. But it's a money management level. What do I mean? I mean, if I will have a retracement and a bullish confirmation, price action, okay, I am able to make a trade to the next level, okay? If I won't have the opportunity to make a trade because I miss it, or because I know maybe the price doesn't give me the opportunity, a price action, okay? It's possible, everything is possible. I'm fine, and I will wait for the price at the next level, okay? If I have then a retracement and bullish confirmation, I will try to make a trade until our next level. Obviously, this price behavior is very similar. It's the same in bearish situations, right? If the price will close below, okay, these levels where the price find support will become our targets and money management. Repeat, they are not final targets, or the final level, the last level is not the final target of the price, is the final target of the pattern. Okay?
Yeah. How do you justify for stopping out at these levels? Will you have like a trading stop?
I didn't understand you. Sorry?
Okay. I'm asking, how do you, I mean, when you get to this level, how would you decide if this is the final level?
Over here?
Yeah.
Here it is.
Right, but say if you know, you're saying about the final target being at the biggest swing, how do you know that the price will continue to go further?
The price, this is a price behavior. When the price is in a pattern and close above or below it, the price will reach the target. Okay? Obviously, I have to make a money management. So when I have a bullish opportunity and I'm buying, okay, right to the next level as target, all I have to do is to assure that when the price reach our first level, I have to make money management. I don't know, or until the price won't give me the information to understand that it wants to make a deeper retracement to go bullish again. It's my job to understand that I had a level I identified first earlier, so it's my job to make a decision, to make money management in order to put my order in safe. Okay, I don't know if the price will reach my level, and maybe it wants to make a deeper retracement and then to restart bullish. I don't know, but I know that when the price will reach a level that is clear, it's obvious, I have to put my order in safe, because I know the price made a resistance in the past, so it is highly likely to meet resistance again. It becomes compulsory to make money management. Okay? Please.
Okay, no, that's great, thanks. So like, do you use trading trading stocks?
Yes.
How do you, what do you look for, say, once the price starts turning around and going the other way?
We have to understand that stock trading is differently, because we have to understand that stock behavior. I mean, um, very often a certain stock has a different behavior on different zone. I mean, if the price will reach 30 level, it could have a behavior. Upper, it could have a different behavior. Okay. One other important aspect is the fact that compared to Forex, the stock has less liquidity, so we have to deal with gaps. And another aspect, I don't know why, but stock is traded only in trading hours. I don't know why. If you allow me just a personal opinion, I would like to see the day when the whole world could have the opportunity to trade a stock 24 hours a day. I don't know why a trader from China has to be awake by night in order to trade an English stock. Repeat, it is just a personal opinion, because I know that it could be some institution that have to be in charge, that have to work to 24 hours a day, but repeat, just as personal opinion, I think that will bring more beneficence, more liquidity to the stock, and I think that it will be far easier for any trader in this world to trade any markets he want. But repeat, it is just personal opinion. The most important thing is trading itself. No matter what is stock, is US stock, English stock, Italian, Singapore, China, Australian, Deutschland, anywhere. The most important for me remain the price behavior. It is very often happen that for less liquidity the stock market isn't so technical. I mean, it doesn't respect always as Forex the levels, and doesn't respect exactly the price at the levels where I'm expecting. Very often it does what I expect from the price to do, but not in the way I'm expecting. Okay, it's less technical than Forex. But on the other side, on Forex we have, I don't know, let's say 20 pairs. Meanwhile, in stock